Hi, I'm Roy Collin, the host of the podcast. You can find everything about me by scanning the QR code there or going to roycollin.com. And you'll find my 6 podcasts, the Podfather, helping people become podcasters, the Awakening, exposing fraud and corruption, but with solutions, the Crypto, all things blockchain technology, meditation podcast, speaking podcast, and the Learn Polish podcast. You can also help the show by actually making a donation, visiting the store, or helping my sponsors. I hope you enjoyed this week's show. Welcome to the Crypto Podcast. You can find all our episodes on the cryptopodcast.org. Launched in 2014, Coinvestors' vision is that digital monies, commodities, and assets are inevitable, and all of the world's financial infrastructure must be upgraded. Their mission is to provide broad coverage of emerging unicorns and fastest growth blockchain companies and crypto projects. Their investment strategy is now in its 10th year, and has to date more than 40 pure play blockchain venture funds in America, Asia, and Europe, and in a combined portfolio of 1,250 plus blockchain and crypto projects, including 95 of all blockchain unicorns, which is incredibly impressive. My guest is the managing partner of Blockchain Co-Investors. Please welcome Matthew Lemel.
Great to see you, Roy, and thank you for having me on your show.
Yeah, no. I mean, like, it's very impressive, like the portfolio, what you've done. So let's learn a little bit about Matthew first before we delve too deep. You might kind of tell us your own story. You got involved in this.
Yeah, sure, Roy. It's been a long time now. I was brought up in the UK, as was my wife, Alison Davis. We came to America 40 years ago, and we made a life for ourselves in Silicon Valley. And in the first iteration, we were advisors to some of the world's largest financial institutions and tech companies, names like Microsoft and Intel and Cisco, and later on Google and eBay and PayPal. And we were helping them digitalize their businesses. So go online, go mobile, figure out how to use social. It was these types of issues, which at the time were novel. Today, we take it all for granted. And so that was sort of first career. Second career, beginning about 25 years ago, we started becoming investors. Alison focusing on investing in banks and payment companies. In my case, internet and fintech was my focus. And so 10 years ago, when we saw, it's a bit more than 10 years ago now, but when we first saw Satoshi Nakamoto's white paper on Bitcoin, I think we were primed to see something that today is becoming more and more obvious. But 10 years ago, everyone was just thinking it was all about Bitcoin. And what we saw was the opportunity to digitalize all of the world's monies, commodities, and assets. And so for us, and we'll talk more about this in a minute, I'm sure, that was very exciting. And so we became full-time blockchain focused. We live in San Francisco. We have a home in London. We have 5 kids, but we love what we're doing. We think blockchain is one of the most exciting spaces in the world right now, and it will be for the rest of our lives.
I'm just curious, are you getting the children involved in the business?
I would never encourage the kids to do anything other than whatever their passion is. And if any of them want to know about what we do, we're always willing to share. In fact, we're happy to share what we do with anyone in the world that wants to know. So far, none of my kids have decided to be involved in blockchain as a sort of a core focus, but a couple of them, are investors or are interested in technology. My youngest son is training to be a vet in the UK. So they've all gone their own paths, and that's probably the way it should be.
No, perfect. So I like asking my guests who they think created. So everyone's got a different idea. Some people government, some people just curious, because I mean, you're deeply involved in this from a long stage. So what's your thoughts on who actually created it?
Well, thank you, Roy. It's a question that in the past I would have given you an answer. And I wrote a book on this called The Ministry of Bitcoin. Anyone who wants can find it on Amazon and Apple and so on. You can buy it online. The Ministry of Bitcoin. and it's a novel, so I had a particular spin. But I went down the rabbit hole of trying to answer your question. And just to show you how deep I went, I actually took every word that Satoshi Nakamoto ever wrote in texts and emails, and I put it all in a big database, and I had analysis done to try and figure out, were there any clues, and where do we think, where was he brought up, and so on, or she was brought up. And then I carried on doing that even when the most recent email trove was released by Marty. And in fact, my point of view shifted a little bit. But today, Roy, my view is that we need to respect Satoshi Nakamoto's preference to be anonymous. And we should just be very, very thankful that he or she or they gave us this great benefit, this great opportunity to make finance and commerce better. And I don't want to name any names. So I still have my views, but I think we should respect that whoever the people or person is or was, they want to be anonymous. And in this world, you should have that right to be anonymous if you prefer it, I think. Certainly around something like this, it's not as if this person has created harm, they've created great good. And I think that's the way we should leave it. Sorry, Roy.
No. And I mean, like, if we look at the timing of it, it's kind of like the financial crisis when people were wiped out, the banks were bailed out, but yet the people weren't. You would have seen that in the UK as well. And I think it's an international thing. So maybe just a warrior that kind of didn't like what was going on. And, and like, if you look at the technology, like what I love seeing is, especially for musicians and artists, a lot of the time they were getting the crumbs on the table. And now if they know what they're doing right, they can have, NFTs and royalties and set up their system in a place that they actually get the payment instead of some company that pretends that they've got their best interests at heart.
I think that's right, Roy. I think that the more time that goes by and the more we see the trajectory of Bitcoin in the world, I think the more we appreciate how cleverly it was designed at the beginning. And Satoshi, he, they, she, was very sophisticated in the sense they needed to understand finance and payments and cybersecurity and coding and the internet, but they also needed to understand global finance and the banking system and value creation. And whilst it's true that Satoshi wrote the white paper to be, the white paper is titled to peer-to-peer cash. Right now, Bitcoin is really a store of value more than it's a payment system. But I think over time, we'll get back to the original vision because there's always going to be innovation and technology improvements for the Bitcoin blockchain specifically. And I think we'll end up with not just a store of cash, but a global peer-to-peer value movement ecosystem, if you will. And it's very sophisticated. And it's the more that time goes by and the more you see other things happen, TD Ameritrade being charged billions of dollars for not knowing what payments they're facilitating, the more you realize that the blockchain is an incredibly powerful innovation that's going to make global value movement cheaper, quicker, easier for everyone.
And one of the webinars that I was looking, I mean, like, you obviously love doing your Excels, but one, like, it was very well done. I didn't realize you'd all the asset classes, but how many times Bitcoin was at the top. And this is like from memory, I think it's every 4 years, it kind of goes down to the bottom. But that was fascinating for me. I didn't think it'd be like that. So you might just touch on the different asset classes and why is that kind of in charge?
Thank you, Roy. Well, obviously, I'm impressed, Roy, that you've actually gone through some of our material and which we try and be as transparent as possible. So at Blockchain Co-Investors, we're primarily investors, but we also have a little bit of a mission to spread the word and try and inform and educate. And so we do have a lot of free podcasts and webinars. And and materials, newsletters, and other things, which people can just get for free if they go to our website and sign up. So what you're talking very specifically about is something that a variety of people have worked on. So I just want to source that. Most recently, I think the version you're talking about came from Bitwise, where we're investors. And what people have looked at is they've looked at all the world's asset classes, and then all the years since Satoshi Nakamoto wrote the white paper. And so, if you can imagine that grid, you've got marching across the top the years, and you've got a stack of asset classes with the one that performs the highest at the top. And because the Bitcoin color is orange, the cells that are Bitcoin are colored up orange. And when you look at that, in 11 of the last 14 years, Bitcoin's at the top. It's the highest performing asset in the world, bar none. And in 3 of the years, it's the lowest performing asset in the year. And as you rightly point out, the worst performing are every 4 years. And we don't have enough history to know if that's a reliable pattern. So we got to be careful. The past is no predictor of the future. And the past, past performance doesn't guarantee future performance. And you and I are not going to give any investment recommendations on your podcast either. However, if that pattern was maintained, then this year, next year, and I believe, this year and next year, Bitcoin should be the highest performing asset in the world. And then the year after, it would be the lowest performing in the world. We don't know if that's how it will play out, but obviously year to date, Bitcoin is up about 100%, and it is the highest performing asset in the world. In terms
And
of
today, I just checked prior to recording, it's like 91,350. So it's at its highest point ever. Like, yeah.
It is. And as you know, we're not traders. We don't, at Blockchain Co-Investors, we're not traders. We don't trade public liquid tokens like Bitcoin, Ethereum, and Solana. We're early stage venture investors. So we're trying to find the next Solana or the next Coinbase. But having said all of that, it's exciting. It's exciting. I mean, we've been in this industry long enough to know we've been on the ropes quite a few times, and the rest of the world has been pummeling us in the face and kicking us and telling us, we're useless and we're over. It's all over for you guys. And we carry on bouncing back as an industry. And it's not been easy, Roy. It's not been easy. You've been doing this for a long time too. There's been a lot of hostility, and a lot of that hostility is not well founded. I mean, it's not that we haven't made mistakes as an industry. We clearly have. We can talk about that. But fundamentally, we're trying to do good things. We're trying to make global finance, commerce, and the internet better for everyone. Quicker, cheaper, easier, more reliable. We think everyone in the world should have access to better investment opportunities. They should be able to hang on to more of their money. They shouldn't be charged outrageous interest rates or fees and spreads. And all of that blockchain facilitates. That's a good thing. It's a good thing for the world, but we've had a few bumps along the way.
And just kind of in relation to that, because if we look at a lot of the kind of payment providers, even like the Visa taking 3%, PayPal, I mean, sometimes there I get some payments in and they're taking 10% if you have your account set on, and the amount that it can be done on crypto. But if we look at a lot of people, they're afraid of the technology. They've heard of people losing every penny. I know that things like Revolut, they'll do it. You can go in and you can buy it. It's not obviously in your own wallet, but at the same time, it's a big institution and it should be safer than some of them. And it's easy. You just go and pick it and do it. Do you see, or have you working with any that's going to simplify it, that basically you can go in and buy it, but also transfer it in an easier way than the way it is at the moment?
Yes, a great question, Roy. You're sitting in Poland. Today I'm in London, but normally I'm in California. I can actually get money back and forth to you, Roy, reasonably quickly. It might take a week. It might take 4 days. I'd probably have to answer some telephone calls. So would you. If I was trying to send you $1,000 and you're going to receive it in euros. Depending upon who my bank is and who your bank is, they might charge us, $100 or something, $50 to $100 to do that international transfer of a SWIFT. We're relatively affluent. It's a pain in the butt, time, cost, but we would do it, and we don't do it very often. But let's not start there. Let's start in Africa. If you try and send some money from Nigeria to South Africa, maybe you're South African, you've got a family member, you're working in Nigeria, and you want to send some money home to your mother. You want to send 200 Nigerian Naira, I think it's pronounced. It can cost you $95 in the old world to send the $200. And this is coming from the CEO of Yellow Card, where we're an investor. Today with Yellow Card, which is a crypto stablecoin platform provider operating in 20 countries in Africa, already doing billions of dollars of transaction flow, he can get that money, or they can get that money transferred for 4 cents, in almost real time. So the person whose mother needs the $200 was getting, $105 in her hands. Now they can get almost $200, almost all of it, into her hands. And so every African country understands that that's a really good thing. And so across Africa, they've been passing pro-stablecoin regulation and new payment regulation to enable people like Yellow Card to make African payments better. How do they actually do it? Well, they use stablecoins. So Yellow Card facilitates most stablecoins, the big ones, Tether, Circle, PYUSD from PayPal as examples. And frankly, most of it's Tether. And why is most of it Tether? Because Tether uses Tron, and Tron payment costs are exceptionally low. If you try and do payments on the Bitcoin blockchain or even Ethereum, it can cost you, or it used to cost you, a little bit more. So I'm giving you a very long answer, but I want people listening in to understand this is not theoretical. It's now. We already have $120 billion or more of Tether issued, maybe 30, 40 billion of Circle issued, and there's billions and billions of dollars worth of transactions occurring, and they may be small transactions, and they may be occurring in places like Asia, Latin America, and Africa. So you and me sitting in America and in Poland, maybe this feels a little less relevant, but for most people in the world, the fees, the spreads, and the time really, really matter. When you've got no money, don't tell me you've got to wait a week. I've got to pay for food today. And if I don't have any money, I need that money now. Right? Whereas for you and I, we can say, well, I'm okay waiting a week because I've got some money in the bank account. It's not really mission critical. And so the poorer you are and the less you have, the more efficiency matters. And the traditional financial system is not efficient. And the consumer benefit is not where it needs to be. And digitalization, which blockchain enables, is hugely valuable from a consumer benefit perspective. Quicker, cheaper, easier really, really matters, particularly to the majority of the 8 billion people who don't have those things.
And with BRICS, and when that currency is kind of not sure how they're going to peg it and everything, because I saw how it was done in Ireland, and everything kind of went up instead of reducing. Just how do you see the markets kind of going when the BRICS currency comes into effect?
And by the BRICS, you're talking about Brazil, Russia?
Yeah.
Well,
and it's like 45%, because I was looking at it, like the amount of the population is actually 45% currently that are going to fall under that.
Yes. So it's a very interesting question. It's a very important question, Roy. And I'm not sure that I have all of the answers. In fact, I certainly don't. The dollar has been the global reserve currency since the Second World War. We tend to forget that it wasn't before that. And there was a decision by the world's central banks on what should be the reserve currency. It was done at a place called Bretton Woods. And most of the central bankers in the world wanted it to be a basket called a banker. And it would have been an amalgam of some dollars, some pounds, some yen, some francs, and so on. That didn't happen. And instead it became the dollar. And at the time, the dollar was gold backed. Dial forward, and even today, it is true that most of the world's trade is denominated in dollars. It's not 100%, it's more like 60%. And in fact, quite a lot of trade is still denominated in euros or yens or other things, other currencies. Does it make sense in a world where China represents 35 or 30% of counterparty global trade that they have to pass everything through dollars? And I think that's an interesting question. It probably doesn't make sense anyhow. If you're China and you're trading with Brazil, or you're trading with India, or you're trading with Saudi Arabia, you have already two currencies to choose from. You can choose from the yuan and the rupee if you're doing China-India trade. Why do you have to pass it through dollars? So I think that's a legitimate question because you're adding a layer of spreads and fees if you go through three currencies instead of two. But there's a bigger issue, and this is the real issue. When the US took on the responsibility for being the global reserve currency, and SWIFT and the Fed system were essentially chosen to facilitate global trade, the implicit assumption was that we, America, would be neutral. We would be Switzerland, if you will, and we would not disadvantage anyone. Everyone would have access. But with Iran and Afghanistan and more recently Russia, we've essentially turned off access and we've frozen accounts. And because of that, it becomes a sovereign level existential threat. So if you're Chinese, you say, I have to have a backup plan. I cannot have all of my money and all of my global trade potentially turned off by America for whatever reason. So you need a backup plan. And so what you're talking about is the emergence of some backup plans. So one backup plan is the digital yuan. One backup plan is to begin to ask Saudi Arabia to denominate Chinese oil purchases in yuan or Saudi Arabian rials, not dollars. Another backup plan is to build alternative SWIFTs that are blockchain based. And all of those things are being explored. And then the part of the equation I don't know is where will it settle? Where will it finish up? And if you were to ask me, I think we'll be in a heterogeneous world, and a lot will still be dollar based and run over US infrastructure. Some will not be dollar based, and there'll be more than one reserve currency, and it may not even go over US infrastructure. And then I think distributed, decentralized infrastructure, including things like Bitcoin and stable coins, will have a substantial and important role, because whilst there are many people who want dollars in Nigeria or Argentina or whatever, there are also people that don't want dollars and they want something else, and maybe they don't want their own fiat currency. So Bitcoin or something else becomes a very interesting alternative.
So going into your own company, like 95, maybe more now, they said unicorn. So first of all, you might let people know, what's a unicorn?
Okay, thank you for asking. So here in Silicon Valley, we have this phrase. Eileen Lee, who I used to work with once upon a time, went off, became a venture capitalist, and came up with this word to describe private companies and projects that have a private valuation of more than $1 billion. And they're called unicorns because unicorns are those mythical animals that we talk about but never actually come across. And so for a venture capitalist, unicorns are very rare. But it turns out that the best venture capitalists in the world get a lot of their return because they do, in the early stage, back a company that goes on to be worth $1 billion or more, a unicorn. So So venture capitalists in Silicon Valley are sort of in the business of backing startups that they believe have the possibility of becoming very valuable companies or projects. So that's sort of what we mean when we talk about unicorns. And the reason we care a lot at Blockchain Co-Investors about them is twofold. The first is because if you track the unicorns, you're also tracking the value creation of an industry or a technology or an innovation. If there's a lot of unicorns in life sciences, it's telling you there's a lot of value creation occurring in life sciences and a lot of use cases and applications and so on. And the second reason is because we're investors. So we use that measure to gauge our own success. We're primarily a fund of funds. So we give money to the best blockchain venture capital firms in the world. They invest it, and then we track whether they have unicorns in their portfolio. And then we take a look at how many blockchain unicorns there are. And if we have a high percentage, that means we're doing a good job because we're trying to get capital in the early stage into the companies and projects that end up becoming the most valuable in the space. As investors, that's sort of what we're trying to do.
And with kind of investing in different blockchain things, because what I've seen is there's a lot of scams going on as well. There's a lot of guys, they might have created something and then they do a disappearing act and they disappear with all the money. I mean, with your experience, because there's people all over the world are investing in different things. What kind of things should they be wary of and to kind of watch out for?
This is a great question, Roy. And in order to answer it and to help your audience, I think the first thing we need to define is what asset classes are we speaking about? Because within blockchain, well, in fact, within any area of innovation, you'll start off early with startups. We call that early stage venture capital. And you'll help form a company that could be called Amazon. Later on, Amazon would raise more capital, and we typically call that mid-stage and then late stage, but it's private investing. And then if Amazon goes public, it becomes a public traded equity, and we call it public equities, and it's liquid. And anyone in the world who, has some money can probably find a way to buy some Amazon stock. So we're talking about a path that has multiple asset categories along it, right? Early stage venture, mid and late stage venture, public equities. I'll call that 3 asset classes. Now in blockchain, it's exactly the same because we have equities. If Coinbase went through those phases, so you could be an early stage Coinbase investor like Blockchain Capital was. That's one of the funds we've invested in. You could be mid-stage because Coinbase raised more money in the mid-stage. We invested again in the mid-stage. Or you could wait till it's a public company and you could back it then. What makes blockchain complicated is we also have the tokens. And tokens represent ownership of decentralized open source software projects building on top of blockchain. But for your audience, they sort of go through the same stages. There's a formation stage. You can back a team when it's just getting started. There's a private seed round, maybe a couple more private rounds. And then there's a token generation event. It may get listed on an exchange. It becomes a public liquid token like Bitcoin or Solana, and it's traded. So just for simplicity, call that another 3 asset classes: early stage token investing, mid stage token investing, public liquid token investing. All right, so now I've set up 6 asset classes within blockchain. And so now I'm going to get to your question. And there's 2 parts to your question. One is, what's the failure rate in each of those asset classes? Because the failure rate is well-intentioned people not succeeding, and it's bad people taking your money. You can lose your money in more than one way. And then secondly, what are the best practices? How do you avoid, the bad guys and the bad outcomes? And how do you get the good returns? So in terms of the first question, yes, there's a lot of failure in blockchain. Yes, there's a lot of failure in all innovation-based investing. So I don't care whether it's life sciences, enterprise technology, sustainable energy. There's a lot of failure, 80%, 90%, 70% in the early stage. By the mid stage, the failure rates are maybe 50%. By the time it's a public equity, the failure rates are much lower. But just be clear, if you look at the NASDAQ or the New York Stock Exchange 100 years ago, most of the public equities of that time no longer exist because the companies failed. The companies went out of business. So big companies go out of business too. Sometimes they get bailed out by the government, but sometimes they just go bankrupt. So that's an important point. All right. So failure, yes. Bad people, yes. How do you mitigate the risks of bad people, bad failures, and bad outcomes? You do a lot of hard work. You have to be a disciplined investor. And disciplined investors differ depending upon which asset class they focus on. All right? So that's why I spent so long on this answer. If you're a venture capitalist, it doesn't matter whether you're backing equities or tokens in blockchain, you've got to do a lot of due diligence. Who's the team? How talented are they? Are they actually going to be able to write blockchain code and use blockchain technologies as well as other things like AI to assist in their efforts and their code writing? Do they know how to stand up a network and a community and incentivize it? Are they really going to write software over time to deliver products and services that the world needs? Ethereum does, Solana does, but believe me, there's a lot of tokenized projects that have nothing built on top of them, including Dogecoin as an example. So what are they really building? So this is called due diligence. And there's a lot of other parts to it. And you should never invest in an early stage blockchain venture, equity or token, if you haven't done your homework, because probably you're going to more likely lose your money than make money. And that's just mathematical. That's just probabilistic. More projects fail than succeed in the early stage. So by definition, if you just sprayed your money across the early stage, you would lose a lot more than you win. By the time you get to public equities, it's a bit different because if it's Bitcoin or Solana or if it's Coinbase or Riot, a lot of people are writing a lot of stuff. And you already know it's real in the sense a lot of people are using it. If it's Coinbase, you can see their revenues and their profits and their products. And so you can rely upon the work of other people. So maybe you don't have to do so much of your own due diligence, but you better have a point of view on price and why price should go up or down. All right. So the bottom line of everything I just said, Roy, is it's just the same as it's always been. You know, you need to know your asset class. You need to know the best practices of investing in that asset class. And if you're going to be an investor, you better do your work. And you know, if you're just going to trust other people, be sure you know who they are. Oh, this is a different point, Roy. But if you don't have the skills to do all the work I just described, and most people don't, and if you're going to rely upon other people to tip you and give you suggestions, at minimum, know their vested interests. So if they're making money by selling something, you can't really trust their recommendation. I mean, that's obvious, right? If I'm selling encyclopedias and I bang on your door, you shouldn't really trust me because I'm selling encyclopedias. You better be absolutely sure you need an encyclopedia, right? Because I'm making money by selling encyclopedias. Well, in tokens, it's the same thing. If I'm tipping you to buy a token and I'm being incentivized because I'm being rewarded lots of additional tokens for selling tokens, then I'm just going to tell you a story that makes you buy the tokens because that's how I make my money. So you can't really trust me. You need to discover the vested interests of third parties if you rely upon them in an investment decision. And unfortunately, in blockchain, as in other areas of technology and innovation, a lot of people will try and hide their vested interests. and then investors can be taken advantage of.
And based on what you just said, there's a lot of influencers were guilty of that, and people thinking because it was certain person with millions of followers that had to work, and they ended up losing all their money.
Unfortunately, yes. And it's like the fact that I'm a great singer or a great football player does not mean I'm a great investor. And whilst popularity and fan bases can be very, very important for rolling out products and services, it still doesn't guarantee they succeed, you know? Um, and so I don't want to diminish the role of influencers. Sometimes influencers are really, really valuable to have in a project, and they can do a great deal of good for a new project. But that doesn't mean they're good investors, and it doesn't mean you should make an investment just because someone you love, an influencer, is encouraging you to do it. I mean, you love them because you love their music, not because they're great investors, right? So, and even then, I would say the same thing. Even if a great investor is pitching something, make sure you know which side of the table they're on, because even great investors sometimes pitch things that they're pitching because maybe they're already an investor rather than they really believe in it.
Is there a fund then that's available? Because I mean, it's like the business world. I think after 10 years it's something like 4%. And you mentioned big companies, like Kodak would be one of them, a big company that just fails. Like if we look at the kind of failure rate, like if you go into like a fund that invests in like 10 of the blockchain technology, is that something that you have? And is there a certain level, or do they go into sectors as well, as in gaming or NFTs?
This is a great question, Roy. Now, on a public webinar like this, a public podcast that's going to go out to people, I'm not allowed to talk about our funds. Anyone who wants to learn more about us can just go to blockchain.mins. And because there's a bunch of rules and regulations about solicitation and all sorts of other things. But I'm going to answer your question in the generic way, because we do want to educate everyone. So the one of the things about the mathematics is that it changes the nature of how you should think about investing. So if outcomes were normally distributed, and if the failure rate was low, you can afford to be not very diversified. Conversely, if you have a space in which the failure rate's very high and the outcomes are very skewed, you need to be very thoughtful. And it turns out that diversification does matter, but also trying to find the people who are persistently in the top quartile matters as well. The best investors, you can simplify that. So if it's a normal distribution, and if there's no persistency means, do the people who did really well last period do really well in the next period? High persistency means yes. Low persistency would mean no. Well, if it's a normal distribution without much failure and no persistency, you can just pick anyone and they're going to get the same, on average, the same result. At the other end of the spectrum, if there's a high failure rate, you need diversification. If there's high persistency, you should seek out the best investors. And blockchain, we feel, certainly early stage blockchain, is a place where you definitely want to be worrying about diversification. And you definitely want to be putting your capital and money in the hands of the very best investors, because the failure rate is very high, but the best investors are making a lot of money. So our investment strategy is informed by everything I just said. So we seek diversification. We try and get our capital into the hands of the best investors in the industry. And they do seem to be showing a high degree of persistency, though it's early days. And then we also invest globally, because blockchain, more than the internet, the innovation is occurring globally. So there's great blockchain companies surfacing in Europe and in Asia and in America and so on, whereas the internet was much more US centric. All right. So for the investors, for your audience, I know I've just made things super complicated, but but I think that's okay. I don't think I wouldn't want us to finish this podcast and for people to say, "Oh my gosh, I'm so excited. Let me just, you know, open an account and start spraying money around." I would not want anyone to do that. I think you gotta take your time. It took you a long time to save the money you have, and you work really hard to save the money you have. I think you should take your time before you invest it and get smart. Put in, you don't have to put in 10,000 hours, but you need to go down the rabbit hole before you pull the trigger on spraying some money around in blockchain or crypto. That's my view.
Yeah. With the different people that were against blockchain technology and have changed their mind, BlackRock, Larry Fink, and even the latest president that's been elected, Trump was one, and he's kind of after reversing. So I'd like to touch on that and also kind of follow up on that as well. Your thoughts on what's going to happen because Trump has been elected.
Yeah. So what's great about this question, Roy, is you and I are old enough to remember that this happens a lot. It happens a lot. We get a new innovation or technology. There's a lot of hype. The incumbents say we don't need it. We're doing just fine without it. But then they begin to see that actually the innovation does make a difference in terms of faster, cheaper, easier. And they begin to say, oh, maybe I should pay a bit more attention. And then one day they get a nosebleed because some disruptive company is suddenly doing things really much better than they can do. And then they say, oh no, I've got to lean in now and I've got to get serious and this is for real. So that path I just went over in words is what happens whenever we release an innovation that ends up changing the world. And so if you look at the internet, I remember those days. I'm old enough to remember the 80s and the 90s. And I remember that everyone said the internet is bullshit and we don't need it. And I don't even think we need a website and no one will ever buy anything online. And, I'm Blockbuster. I've got a store in every corner. You can pick up your video from me, so we don't need this. And that was real. So, and it wasn't just Blockbuster. It was the CEO of almost every large company in the world didn't think they needed an internet presence. And then by the end of the 90s, a few people were saying, well, maybe this is, maybe this is a little bit more worthwhile. But people were still saying, no one will ever buy clothes online. You got to try them on. You got to feel them and touch them and be sure. And yet here we are today, and more apparel is sold online by Amazon and Walmart than by almost any other retailer in the world. So they were wrong. So in the case of blockchain, the digitalization of finance, investing, payments, commodities is inevitable because it brings so much consumer benefit. You can, like we talked about earlier on, you can make payments happen cheaper and faster, and that's good for everyone. And so at the beginning of this process, you might be the CEO of a big bank 8 years ago, and you're sort of saying, well, I have a payment solution and it works and people can move their money. Yeah, it takes 4 days. And yeah, I charge them $95 if they want to send $200 to South Africa, but they pay it, so they must be pretty happy. And then Yellow Card actually is doing it for 4 cents in almost real time in Africa right now. And you're an African bank and you say, oh my God, I'm going to lose all my customers and all my business. I gotta sit up now. And that has rippled around the world. So one of the things we do at Blockchain Co-Investors is we track twice a year the world's 50th biggest institutions by financial institutions by assets under management. It starts off with BlackRock at the top, and you go all the way down through lots of banks and asset management companies to number 50. And then we look at which of the digital products and infrastructure have they already deployed, digital wallets, stable coins, digital assets, or other things. And it's lighting up green now. It's about half green. It's still early days, but there's very few CEOs now of the world's biggest asset managers that aren't saying this is for real and I need to prepare my organization. I mean, Vanguard is a holdout, but Vanguard's really not doing very well when you look at their products and compare them to the BlackRock product. So at the end of the day, the BlackRock Bitcoin ETF is the most successful ETF launch in the world, and Vanguard doesn't have it. And Vanguard knows that, it's not going to take too long before Vanguard lights up green as well. You can't be the only financial institution in the world that's not using the new infrastructure and new technology.
And just like finally with Donald Trump getting in, how are you seeing the market going? Because I mean, he said he was going to fire Gary Gensler, but basically, from what I can see, is like he wanted to stock up on Bitcoin as their reserves as well.
Okay, great question, Roy. And I know we are nearly out of time. That's another thing we track. So for a number of years now, we've tracked all the world's financial centers. That's New York, London, Hong Kong, Zurich, and so on. And whether or not they're supportive of these technologies, have they passed pro-digitalization and crypto legislation and regulations? And that's also all lighting up green. And so Zurich has, London has, the European Union has, and so on. Hong Kong has. But the US was the big laggard. The US was, over the last 4 years, for some reasons we do not understand, for some reason, Biden and his administration and Gary Gensler and Elizabeth Warren were very anti this industry. We don't understand why, but they were. And so they were trying to blow it up and hold it back and sue it out of existence. And that's not going to happen anymore, because last week, a majority by 2/3 of every congressman, senator, and of course the president too, is pro crypto. We track that. And about 2/3 of the people that were elected last week are pro crypto. And that's going to change everything in America. And so, yes, it is Trump as well. And Trump is very important as US president. But just to be clear, it's the majority of the senators, it's the majority of the House. And there's very good reasons, Roy. And at its core, it's because everyone listening to this podcast of yours benefits from these technologies. And once they realize that, they want them. And if they're digital natives, they want them for sure. And 60% of the world is a digital native, 50% of America is a digital native, maybe 30 or 40% of the voters are digital natives. And that number will only go up because old people stop voting at some point and young people join the voter base at about 2.5% per year. So by the time we have the next presidential election, 10% more of the voting base will be digital natives and they'll be pro-crypto. So there's no scenario in which this goes backwards. We are now on a new path, and that new path is that America is now pro this technology and innovation, and that means the whole world can move forward much, much faster, and that's a great thing for everyone.
Excellent. Listen, Matthew, thoroughly enjoyed it. I know people will appreciate your nice, beautiful English accent instead of getting subtitles from me or getting a translator for my Irish accent, but you might let people know where they can find you.
So it's blockchain. You can see it on the screen right now, blockchain.coinvestors.com. And we have a lot of free resources. You can sign up for newsletters, podcasts, books. We're very transparent. And that's one of the great things about blockchain. Everyone in the community is helpful. Well, I shouldn't say that. As a culture, we are transparent and open and sharing. And certainly we are at Blockchain Co-Investors. So we're here to help you get smart, get educated. If you're an investor, you can always talk to us about that, but you don't need to be. If you just want to have resources, we have a lot that we give away for free.
Excellent. And I just encourage everybody to go into our website and look at the webinar that I was talking about, because it's very informative and it's worth just going in just for that alone. So Matthew, thank you very much.
Thank you very much, Roy. And very good to be here today.
That's all for the Crypto Podcast. You'll find all our episodes on thecryptopodcast.org. Sure to give us a thumbs up, 5-star rate, and share with your friends, and comment on what we discuss. We love to read your comments. Until next week, take care.
So I hope you enjoyed this week's episode. As mentioned at the start, you can find my 6 podcasts on roycollin.com or scan the QR code if you're looking to start a podcast or do a podcasting tour, help with that. Also, if you're looking for a virtual assistant, we also have that service. And you can help the show by visiting the store, supporting our sponsors, or making a donation. Until next week, take care.